Exercise 10.4, parts 1 and 2, asks us to consider the difference if preferred stock has or does not have the cumulative right. Well, we see here that in part 1 we have dividends in arrears, so that means that they do indeed have the cumulative right. And that means, like we talked about in class, if you didn't pay a dividend this year and you pay one next year, your preferred shareholders get 2 dividends. So let's figure out how much one dividend would be, and then we can go from there. So we have 2,000 shares of preferred stock at 5% of $100 par, which means that every time we pay a dividend, each preferred shareholder gets 5% of $100 or a $5 bill. And we happen to have 2,000 of them, so that's $10,000. So every time we pay a preferred dividend, $10,000 goes to the preferred shareholders. The balance goes to common stockholders unless there is a payment due from last year, and that is the case here. So last year we didn't pay any dividends, so we owe the preferred shareholders $10,000 from last year. We owe them $10,000 from this year. And what's left, because you remember the total dividend, they told us the total dividend was $22,000. The company wants to give away $22,000 to its shareholders. $10,000 goes to preferred shareholders with the cumulative right from last year. $10,000 goes to preferred shareholders for this year, and the remaining $2,000 goes to our common shareholders. That's preferred shares with the cumulative right. They get a catch-up dividend plus this year's dividend. Now part 2 says, suppose we don't have that cumulative right, so our shareholders don't get last year's dividend. Our preferred shareholders don't get last year's dividend. They just get this year's dividend. Well, let's see how that works. There's nothing due them from last year, okay? Because it's not cumulative. So we don't owe them anything from last year. This year, we do indeed owe them their 2,000 shares times 5% times $100 par. So each shareholder, each of the preferred shareholders, gets a $5 bill. That's $10,000. And the remaining $12,000 goes to common shareholders. So there's the total $22,000. In each case, we're giving away $22,000, but in part 1, the preferred shareholders got 2 dividends, and the common shareholders got 1. And in part 2, there are no dividends in arrears. There are no cumulative rights. Therefore, one dividend goes to the common shareholders, one dividend goes to the preferred shareholders.